of the Kansas Department of Credit Unions. Welcome, Julie.
Am I on? Oh, see, I don't like that. Okay. So I'm Julie Murray. I'm the current administrator for the Kansas Department of Credit Unions, and I wanted to thank you for the opportunity to visit with you this morning about our credit unions and our agency. A little history. Our credit union movement started in Kansas in 1929. Our first credit union chartered served postal service and civil service employees, and they're still in existence. Our state chartered credit unions are exempt from the Internal Revenue Code, but they do pay sales tax, property tax, and employment taxes in the state. We currently have 46 state chartered credit unions with assets in excess of $6 billion. Our largest credit union is Credit Union of America in Wichita. The smallest is in Hutchinson, Kansas. It's Catholics United. I brag on that credit union because they believe it's a mission, and they will do small loans that other financial institutions won't do because it costs them money to do it. But it keeps lights on and bread on the table. So I like to brag on them. We still have 3 home-based credit unions in Kansas. Most of our credit unions were initially chartered with a specific field of membership. They want to serve a group of employees, members by association, or a geographical area. Our law allows for all 3. We do have 1 state chartered corporate credit union. They serve credit unions in Kansas, Missouri, Oklahoma, Nebraska, Colorado, and Montana with investment, liquidity, and cash management products. Our agency began in 1968 when the legislature approved the formation of the standalone agency for regulation and examination of the state chartered credit unions. The fee structure is set that it requires all state chartered credit unions to pay an annual examination fee to the fund, assuring that the agency will be fully funded without the assistance of the state general funds. All fees are remitted to our credit union fee fund, with exception to the $100,000 that we pay into the general fund. Our staffing allotment is 12 FTEs. We currently have 10 employees with 2 openings. We have an administrative specialist, administrative officer. We currently have 6 financial examiners, our financial examiner administrator, and myself. Our examination cycle requires that we have our credit unions examined once every 18 months for safety and soundness. We actually work on a 15-month schedule, so that way if there's some shifting in the schedule, we don't pass that deadline. We've set that standard in 2005 and maintained it since then. We operate and conduct our examinations in conjunction with the NCUA's requirements. We utilize their software, their examination tool. The reason for that is continuity for our credit unions. If we set standards and keep to the standards that the NCUA sets when they come in for their regular insurance examination, it won't be confusing or misconstrued. We currently evaluate 6 risk areas. We evaluate each credit union's capital adequacy, their asset quality, their management, earnings, liquidity, and sensitivity. We assess and assign an individual rating between 1 and 5. 1 is the least financial risk, and 5 is the most financial risk. We currently have 9 credit unions that are rated CAMELS 1. 24 are rated CAMELS 2. And for me, CAMELS 1 and 2 are both very well-run credit unions with very little supervision concerns. We have 12 credit unions that are rated CAMELS 3. Most of those are earnings concerns right now. Our smaller credit unions struggle with maintaining the earnings level to augment capital. And then we have 4 credit unions rated CAMELS 4. 95% of the assets in our credit unions are in 1s and 2s, so they're well-run credit unions. These statistics are very similar to last year's statistics. I think we were at 93% of our assets in CAMELS 1 and 2. Interestingly enough, the NCUA has reported this year that they've seen an increase in CAMELS 3 across the nation. Even in the larger credit unions, we haven't seen that here in Kansas. The 6 financial risk areas that the examination team look at, they look at whether risk areas are low, moderate, or high. The risk areas are the credit risk, the interest rate risk, liquidity, compliance, strategic, transaction, and reputation. We partner with the NCUA to complete joint examinations, generally between 10 and 15 examinations a year. We work with the NCUA. They choose those based on the time frame. They want to examine each of the credit unions once every 5 years, asset size, or trends and concerns that they see. The challenges our agency has seen, I always say it's keeping up with the trends. FinTech is big in our financial institutions, and each new product has its own compliance concerns and issues, and staying abreast of those is a challenge. Economically this year, we saw a lot of change, and so keeping abreast of all that information and trends and having examiners have to become capital market specialists almost overnight, that was a challenge this year. Our agency is seeing 2 to 3 credit union mergers a year on average. That's in line with a national level. We're seeing a lot of smaller credit unions struggle to fill manager positions. If they have a seasoned manager or CEO that retires, it's hard to fill those shoes. Declining earning trends makes it difficult, so sometimes they merge just for economies of scale. What we've done this year to try and be more proactive is to talk and really review succession planning efforts in the credit union. And for credit unions, because they're different than banks, having boards of directors and supervisory committees that are volunteer, our succession plannings have to look not just to the employees and management, it has to look to how they're going to fill those vacancies on the board, because that's a big fill. Our credit union challenges, we've had some very rapidly changing economic conditions this past year. However, our credit unions have remained fundamentally stable. This is evidenced by the average net worth ratio of 13.71, which is well above the 7% floor that is considered well capitalized by the NCUA. We have seen signs of increased financial strain. Delinquency levels have increased over last year's levels. However, credit unions in Kansas are reporting slightly lower levels than the national average. But even so, our credit unions maintain sufficient reserves for loans and lease losses to mitigate that risk. Cybersecurity has been and remains a top priority for our credit unions and for our agency. Last year, I reported that most of our larger credit unions had gone through an IT examination with an NCUA specialist. This year, the NCUA put out a tool that is a scalable IT review. So our $1 million credit unions are getting an IT review. Our $50 million credit unions are getting IT review. And so the recommendations we bring to them are reasonable. And our credit unions have been through that this year. So that's an additional process. So just some information about our credit unions. Total members were a little over 500,000. Again, Credit Union of America in Wichita is our largest at 1.4 billion. Catholics United is our smallest with just under 200,000. They're also the newest in 2005. Our credit unions are continuing to focus on consumer lending, offering secured loans, unsecured loans, mortgage, member business loans. Our very small credit union actually spent several months in conversations with our office trying to develop what they considered a payday alternative lending program. The state doesn't have set forth any requirements on that. The federal does. So we work together to develop something that is compliant with our state laws, but meets the spirit of what they're trying to do. They didn't give up. Several rounds of conversations, several reimagining of that program, just to be able to provide people in need an avenue when others wouldn't. So that was a development this year. Services with our credit unions continue to be share savings, checking, certificates, debit cards, and online banking and payment options. Those payment options are getting more and more sophisticated. Our credit unions are looking to the new FedNow program. I haven't seen a credit union that's going to be sending money over FedNow, but receiving. And if you don't know that, that's an immediate transfer that will compete with some of the other online resources that consumers have. So as of September 30th, our credit unions had assets, if we include our corporate credit union, of $7.3 billion. Our loans totaled $4.9 billion. Our share deposits, 6.094. Average delinquency was at 1.22. But the average net worth ratio is at 3.71. And that concludes my testimony. I would be happy to answer any questions.
Thank you very much. We appreciate the report. Committee, are there questions? Senator Pittman.
Thank you. Thank you, Chair, and thank you, Julie, for being here. I was wondering, I probably spaced out when you were talking about it, but why did your reviewers need to become capital market specialists this year? Can you kind of explain the kind of dynamics there?
So our credit union's balance sheets are subjective based on change in the market. So when you have a credit union that has, I like nice, simple, round numbers. They have $1 million in car loans. And the car loan rates were 3.5% a year ago. And overnight, the interest rates spiked. What happens is if that credit union gets into a place where they need to start selling off assets, I'm sorry if I oversimplify this, but I use garage sale terms. This is how we start talking about it. This is in our agency. Let's say we have a crazy year like we had, and our credit union's majority of their assets are in loans, and their loans are at 3.5%. If they get into a place where they need cash and they have to sell those loans to you, you're not going to buy those loans at 3.5% when you could go make a loan at 7%. So then these 3.5% loans have to be devalued. And that's just one line item on the balance sheet. It's all of them. And the question really hasn't been for us what happened in the market, it's how prepared were the credit unions? What did they do to watch? You know, what we saw is a lot of credit unions went from, when rates were stagnant, they went from monthly reviews to weekly reviews, sometimes daily when things were getting a little hairy. We looked at what's their plan to ride through. This is, I don't want to get too far into this, but this is why capital is so important. How much money do they have in savings to ride through this? Where do they see their breaking point is? What are they going to do to stop it before we get there? These are the kinds of concepts some fairly new credit union examiners had to learn this year and then convey to our credit unions. The good news, I would say, is our credit union CEOs started talking about 2023 in the middle of 2022. So it wasn't, nobody was blindsided. The question is, how are they going to ride through it and get to the other side was really what we were focusing on for exams. Did I answer your question or did I go too far?
Oh, you did. I was just wondering, like, do you give them guidance about how much cash they now need to have? And if in the like, do you give them advice given what the Fed signals over the next year to help them understand their capitalization?
So are we talking about capital levels or are we talking about cash on hand? Both. It depends. That's the answer every examiner gives to every credit union. Depending on the sophistication level of the credit union, you got some big credit unions, they're doing cash flow analysis daily. We want them to move from maybe a 3-month stance to a 6-month stance, so they know exactly what they're looking for along the way. That's one of the processes we look to see and how they're going to meet it. And their cash flow, if you're a consumer, you've been looking at, you know, the rates. You can get a CD special over here for $5. That's one way. Borrowings is another way. So we're looking at cash flow analysis. We're looking at cost of funds. It's really the processes the credit unions are doing to see where they're at and where they're going. And so one credit union may be able to run with just 2% cash and short-term investments because they have all of this monitoring in place and all these avenues they can go to. Another might need 10. It's a tough job my examiners have, and the credit union CEOs. So,
Okay. Senator Fagg.
Thank you, Mr. Chairman. Administrator Murray, thank you for your presentation. I was, and this kind of follows up with what Senator Pittman, do they do very much stress testing? That'd be kind of hard for a little industry to get into that, and then the complexity of a larger one, but where they look out 3 years, 5, you know, because you might have the cash this year, but one's rolling off quicker than the other, and when we went from 0% to 5%, that was not a,
It was not fun.
so I just wondered how tough you look at stress testing.
So the complexity of a credit union's processes depends on its size. The smaller credit unions are really not required to do that. Once we start getting into, I'm going to say $50 million credit unions, you see them utilizing a service from our corporate credit union. They do some modeling that they offer to their credit union members that's reasonable. And they have a very knowledgeable team that will work with a credit union to analyze and review that information. The bigger they get, the more we look for. You know, we have some credit unions that are using some super sophisticated modeling. And even that wasn't quite enough for what happened. But yeah, we look at all of that for each of them. Once they get over a certain threshold, 250 million, they have to have additional contingency funding plans. So it's all scalable based on where they are. The smaller credit unions really just have to have a policy. And when you get into the smaller credit unions, and I'm saying 10 million and below, they don't do a lot of complex investments. They don't do a lot of long-term lending. So their cash flow analysis is pretty simple.
Thank you, Mr. Chairman. There's a follow-up question. Administrator Murray, what is your most concerning issue for Kansas credit unions? You know, you kind of went into this, and I was writing this down while you was going through that. IT is probably a big part. What's the trending for the number of credit unions over the last 10 years? Do we have more? Do we have less?
So our
Trying to get a
credit
feel
union number has gone down.
Okay.
Assets have grown.
Okay.
So they're, you know, like some of it is just that they've grouped together so they can provide more services, and therefore they're attracting more members. But it's done in a fewer number. Now, kind of makes our job easier a little, because when we have fewer examinations to go to, we can spend more time focusing, because you have to spend more time with the bigger ones and the bigger processes, more complex processes. So while the number of our credit unions have gone down, the asset size keeps growing.
This is it here, one more. Thank you, Mr. Chairman. Administrator Murray, as far as assets or liability side of the ledger, which one's most challenging at this point? Are people, because you can't pay 5%, you know, move, or the loan side, you know, people saying, oh, I don't want to pay 7 because I could get it for 3 last year. I just wonder which side's more challenging to you in the credit union industry.
Well, I would say that if you were to talk to some of our CEOs, they would say right now it's a tightrope. You know, a couple of years ago, I would say assets were challenging. They were fighting for loans, right? And if they couldn't, you know, get the lion's share of the loans, the money that they had to invest wasn't earning much. And we were nagging them. You have to earn more so that you can augment capital. Well, now they're fighting for deposits. And then how do you manage staying relevant by still offering loans, but not pricing yourself out of the market? So right now, it's probably the most challenging I can imagine balance sheet management is. Pricing has to start on the asset side. They have to price those loans appropriately to cover all their costs and all their reserves. But people are chasing hot money right now. Between the economy, which saw consumers spend down their savings, and then those folks who had money in savings looking for higher rates of return, our credit unions have seen some runoff there that they've had to increase their deposit rates to keep increasing cost of funds, or look for other ways. So, you know, I didn't answer your question because right now it's really tight on both sides.
Senator Warren?
Thank you, Mr. Chair, and aware of our time, and we have another conferee today. But just quickly, thank you for being here, and you play an important role in our financial market. A question about the full-time employees you were talking about, and there are 8 financial examiner positions. 2 of them are currently vacant, and you have said it's a tough job that the credit examiners have, and it gets complicated as there are changes in financial conditions that you talked about. They had to learn quickly capital market specialist issues. How does someone get the education or the training to be a financial examiner with your office? Just briefly.
Briefly.
And are there continuing education, or how does that work?
So there's a couple of things, but to become a fully functioning examiner where you can really actually lead a small-scale examination, the process is 2 years. The NCUA actually, at their expense, provides the training to go through that. And then after that 2-year process, there's ongoing training in more complex areas. On top of that, I'm looking to spend a little money in our budget this year to augment that with some even more in-depth classes for some of our more advanced examiners. So it is an ongoing process, takes about 2 years. The reason for the openings is that what we found in the past is if we fill a bunch of positions right away, it's too much stress on the system, and they don't make it. So going slower.
And are these internal classes, or are they university classes?
So the NCUA actually has an entire training program. They bring our examiners to Alexandria, and they pay for the flight, the hotel, they train them, so that's to their specifications.
Got it. Thank you. Thank you, Mr. Chair.
Senator Olson?
Thank you, Mr. Chairman. I got a couple questions. First question is, you said there's been an increase in the downgrades to 4 Camel rating or whatever your rating is. That definitely concerns me. Is it because the quality of loans or the quality of assets that more of these downgrades are happening?
So the downgrades that we've seen, so nationally, all right,
Sure.
the NCUA has stated that they've seen a downgrade from Camels 1s and 2s to more 3s. And they were talking about credit unions that I think are huge, 500 million and more. They've talked about some liquidity, some assets, delinquencies. They've talked about a lot of things. Now in Kansas, the ones that we've seen that are increases to the couple more 4s that we have, smaller credit unions trying to keep up with regulatory concerns and earnings. It's not that they can't work their way out of it. It's not, we see ourselves as a partner.
Sure.
With our credit unions. If our job is to ensure the safety of the deposits of our consumers, part of that is making sure our credit unions are strong. So while we might downgrade them a little to a 4, we work with them, increase our supervision to get them to clear those items so we can upgrade them along. And they can. It's within their purview.
Yeah, I'm sure if they went to a 4, they're under an order,
Yeah.
probably.
Yeah.
You're watching them closely. The other thing, I mean, you see all the assets in the credit unions. Are you concerned with past dues and loans right now? I mean, to me, that's probably the field especially looking at what you lend on, I would have to say, I'm sure you're preparing the credit unions, but I think it's
So
got to be increasing in a
Yes.
bad way.
it is. And when I looked back at last year's testimony, I think we were at maybe 60 basis points in delinquent loans, and we're a little over 1. The economy is stressing, you know. So a couple of things happened this year. Credit unions had to go to CECL, which is an accounting methodology for credit losses. The timing of that was interesting because what it did is it required a little more in-depth analysis of their loan portfolio, and it required them to maybe hold more in reserves than they had been. So they're prepared. We have credit unions talking a lot with their members. They want to work, credit unions want to work with their members to get them back on track, you know, but they're also increasing some of their collections, and they might be looking at tightening their credit to manage going through. It's not anything that was unexpected. We've been talking about a delinquency bubble for almost 2 years now coming, so our credit unions have been ready, and they're well capitalized to ride it out. I think it's unrealistic for me to expect that every year is going to be a good year for a credit union. But I think, making it through is, again, it's those processes. How are they going to manage it to make sure they're working through the other side? I think that's my concern.
Yeah, I'm sure you see a lot of tough cases, but in a real bad economy, you can eat through 5 to 10% of your capital really quick and eat your reserve funds.
It's true.
With bad loans, if you have a big housing or auto or certain thing, and you have to start writing them loans down, and all of a sudden the pricing goes down. But I'm sure you've been prepared, so.
We are watching. We're trying to be forward-looking in that, yeah.
Senator Cluse?
Thank you, Mr. Chairman. Thought I would just chime in. Could you just speak a little bit to, are you seeing any trends when it comes to the real estate, personal, commercial, up, downs on either side right now?
So the conversations that I've had, they're specific to Kansas as far as the residential real estate market. And the reason that prices are still so high is that there's nothing on the market, really. And that's because of the higher interest rates. It's not a time for people to want to move, so they're not selling. It keeps the prices higher than what we'd expected by now. Now, I can't speak very well to commercial, to the commercial markets, because we don't have a lot of credit unions that are heavy into that. I do know that delinquency nationally is on the rise. Vacancies are up in commercial buildings. So it is an area that we spend a lot of time looking at if we have a credit union that's in it, but we don't have very many, and they don't have a very large concentration.
Julie, thank you very much for your presentation and for taking our questions. We certainly appreciate it.
Thank you.
Committee, we will now turn our attention to Michael Murray, who is Executive Director of the Kansas Credit Union Association. Welcome, Michael.
Thank you very much. Thank you for the opportunity to address the committee. And once again, just to settle the questions, no, the regulated and the regulator are not brother and sister.
Oh, thank you. Because I think it could be mother and son.
That was a pretty thorough accounting of the status of the credit union agency in Kansas that you guys just got, and some very thoughtful questions. Thank you for that. I wanted to start off first by thanking everyone for their work last year in all financial institutions' issues, but particularly the ESG. I know it's not necessarily a settled issue, but it's something that I think Kansas took a very thoughtful approach last year by not imposing any mandates directly on private business, certainly not on credit unions or banks. And since then, there's been plenty of reporting in recent months about how there has been a significant change nationally. Your BlackRocks of the world, or any other investors that were previously shouting from the mountaintops that they were engaged in ESG and actively seeking every avenue, they're taking a step back. And I think that was kind of the idea, where the approach you guys took, you knew that you weren't, there wasn't a real obvious way on how to just ban the use of ESG in Kansas without putting some pretty onerous mandates on private business. But at the same time, the aggregate of Kansas and other states passing bills like you did, I think, has made a significant difference. And so look forward to see that trend continue. And at the same time, any mandates that were put on the state government, the pension fund and everything, at least I'm not aware of any significant hindrance to them at the same time. So thank you for that. It was great working with you on that, and looking forward to working with you guys this year. So a few things that she'd brought up were so your structural differences in financial institutions. I know this is a refresher for many, but your credit unions, we have a volunteer board of directors. In our credit unions, we're not-for-profit cooperative model, very similar to your ag and electric co-ops that a lot of folks are familiar with. They're locally owned and operated by the members of the credit union, and have an array of other market restrictions placed on them, which then in turn you do have that income tax exemption. But I'm happy to report that credit unions do pay tens of millions of dollars in taxes in plenty of other ways, including property. I don't know if that's a significant one in the state right now, but property sales and other related taxes associated with any other business. And, but some of those efficiencies of not, paying, any excess monies out to your dividends to your members and, not to shareholders or anything. There's efficiencies that credit unions, I think, are unique to credit unions where we're able to serve Kansans and serve folks, falling upon hard times or anything, particularly with inflation and everything going on right now. This last year, I mean, we're talking tens of thousands of loans made to Kansans with credit scores of 640 or less. A similar amount of small dollar loans helping Kansans bridge any shortfall between paychecks, the skip pay loan deferments. And credit unions have a pretty long history at this point of being very engaged in a financial literacy training. So we feel like they're important to their communities. They serve a market in the financial services sector that's needed, and there's room for everybody in there. The legislature's been pretty good over the last few decades of kind of keeping a balanced approach on how they regulate banks and credit unions. While the population has grown over time, the overall market share between banks and credit unions remains about a 93-7 split in favor of the banks. But the just sheer amount of people, it's over 700,000 Kansans that are part of credit unions, and we're pretty proud of that. There was a question earlier about threats or challenges, and I agree with what Julie says. Something that we've been working on the federal level is data security. All these there's a lot of different versions of that, but you have the ransomware attacks and everything that are becoming more and more prevalent. I know our court system has been dealing with quite a big one here, but any other difficulty that a lot of your other businesses are seeing right now, staffing shortages and the like. I just wanted to emphasize that our members in Kansas have always indicated to the association that they have a great working relationship with our regulator at the department. So we definitely do field some complaints here and there, but it's always on the federal level, not on the state side. So we've been thrilled to work with them, and we've been at least tinkering around a little bit, looking at the differences between state and federal charters for credit unions, and we think that there's some efficiencies at the federal charter that we're looking to offer state chartered credit unions. So we're working on a piece of legislation that will bring forward soon. It's kind of a credit union statute modernization bill that we look forward to talking with you about soon. And other than that, I'd be thrilled to take any questions.
Committee, are there any questions? Senator Gossage.
Thank you, Mr. Chair. Just a very quick question. Do you know offhand how many of the credit unions in the state of Kansas offer health savings accounts?
Just one moment. Okay. Sorry, neither I or the department have that right here, but I am happy to follow up with you on that.
Thank you.
Health savings accounts.
Thank you, Mr. Chair.
Committee, additional questions? Okay, I see none. Michael, thank you very much.
Thank you so much. And then I do want to give a quick shout out to Credit Union Day at the Capitol, February 6th. We'll have a reception at the Beacon, and you'll have 100 to 200 folks from every corner of the state in this building beforehand. Thank you very much.
Thank you. Okay, committee, that completes our presentation on credit unions today. Because of scheduling changes, because of our snow day yesterday, we will have the OSBC in tomorrow to give us an overview of our Kansas banks. So anything else that needs to come before the committee? Okay, we are adjourned.